evening. Ira Epstein of Linn Associates with your financial market wrap-up for this Wednesday, the 5th of August, 2020 at 6 p.m. Central Time. Runaway Train. Wasn't there that song? I wish I had. My son can sing and play instruments. He's had a band. They got a lot of albums. People know them. I can't carry a tune. Even in the bathroom, the sound system wants to go out. I'm terrible. But it's Runaway Train. And that's what you have in the stock market. Certainly the metals. They've been on a tear to the upside. And, you know, I'm not looking for a derailment. I'm looking for pauses, curves ahead as the market backs off. I've been watching tonight with fascination. I just saw Mitch McConnell. I saw the president just now on his press conference. And Mitch McConnell going, he does not have the votes to pass anything with all of his members of the Republicans. They are mixed on their feelings, and he was very clear about it, and he's been clear about it for a long time. The Democrats, on the other hand, are hammering away what they want. It sounds as though they're still relatively far apart, but the market believes that the president, on his own, will go for the payroll tax, will stop evictions. It's about all he can do. He can't start writing those checks again, but he is and did say he is behind a move to save the airlines. You know, I looked at the percentage. We had a surge in air flight, if you'll remember, in May and June. July tapered off. Do you know what percentage we're running at of the numbers and everything? 27%. It's not enough to keep them going. They need more help. But I pray that for that help that we give them, they stop gouging us with charging us for everything. Aren't you tired of it? Give us a fee. It should include baggage. It should include the other. You're done. Make it fair. All these add-ons, I feel like I'm being robbed every time that happens. But let's get away from that. So where are we? I think the market is right now starting to think about Friday's non-farm payroll. We're going to get the Challenger report tomorrow. We're going to get other jobs data. The ADP number was not a good number. They were looking for 1 million new jobs. They got 167,000. That is not what you call a strong number. Maybe that means we're going to see something weak there. Countering that is that we're backing off in the bonds and the notes, as you can see. We were a 5.18, right in that range settlement yesterday. We're back to 5.48 today. So you added 3 basis points. Not a disaster, but the fact that the market's looking at that. When we take a look at a weekly area chart of closes, I told you just 2 days ago, I think this market, why would it not make a run for this right now? I think it will. I'm so happy that back in April, I recognized that I know I said this. I was with Liz Clayman, and I remember saying it. I said, Liz, this feels to me like we're back in 2008, 9, and 10. When the market finally bottomed in 2010-ish and the market took off, I was looking at it and I was caught saying, oh, we're going to test those lows. And I was saying that back here, folks. I changed my mind over here. And I said, you learn from your lessons. I never thought it was going this high. So if you're saying, look at he swung gears, no. If you were to ask me that we're going a line like that up, I'm not as good as those other guys. I wish I were. And I don't even know who they are. When you look at how this market is climbing, it's just a relentless move. It climbs the wall of worry, and that's what we used to call it. The market's got the pattern of higher lows, higher highs. These are the summer months. August is traditionally a bad month for the stock market. Well, we're still up 3 points early in the week, and we haven't given up any of these gains. Doesn't look too bad to me. The market has done something very interesting. It keeps holding the 18-day average of closes. I call that the line in the sand. When the market is over it, that determines to me bias. If you're under it, I have bearish bias. If you're over it, I have bullish bias. What else? If you get a good-sized correction, typically it's a run to this moving average, and then the market tries to figure out what to do next. So if we correct it, I'd see that, but we still have these numbers that are under that. So I'm not seeing anything on the immediate horizon that says, oh, this move is over in any manner. When I look at Bollinger Bands, I won't forget the importance of them. When you hit them, I think the quote-unquote smart money says, I'm going to take some money off the table, gives me buying power if I want to buy that again on the breaks. That doesn't mean they're going short. The trend is over. It doesn't necessarily mean they're coming out of everything, but I do think they're using it that way, and I think the algos build it in that way. In terms of momentum, let's take a look right here. Embedded means that you convert the momentum oscillator, called a slow stochastic, which is what this reading is, from overbought to locking in a trend. The trend stays locked in, and I'll explain it, until one of the lines unlocks itself. You can't count tonight because we don't know where we're going to finish. We know that the settlement on Wednesday, both numbers were over 80. 80 is your key number for embedding. The day before it was over 80, and the day before. When you get 3 days in a row, the numbers are over 80, you're embedded. You lose that reading when the red line closes back under 80. Until it's lost, it tells me that it's systems go, all systems go, that on the pullbacks, I'm looking for the pros to buy the market. Now there's caveats, and I teach them to my traders in the morning in my morning subscriber video, where I reinforce my charting course and I throw out very specific buy here, sell there ideas. This is general what you've got. This is the teaser to get you into that. I hope you appreciate what it is. It's my sales pitch to get you there. But it's also, I give you the best I have in a general fashion. So I'm looking for the pros to take some money off the table, looking to be buyers on the pullback here. In the Nasdaq, not an embedded reading. This is an overbought reading. I know you're going to tell me, Ira, we've been there. Not really. You were embedded here, you were embedded here. This market does a nice job in the Nasdaq of when it wants to lock in and make a run, letting you know. All it's saying right now, an uptrend into that wall of resistance, the upper Bollinger Band, and that algorithm will keep the market within it 95% of the time. Very important. So I do think professional money, I don't say it's coming out, I say it's trimming back. There's a very big difference, and I think they'll give themselves buying power on pullbacks. In the Dow, we stuck our neck up to a good number today. This market came alive. It went right where it should have stopped. This is how you're looking coming in. I call this sideways action. And when I see it narrow in this much, I also term it a pipe. And in a pipe, you go up, you hit support, resistance zones, and you don't go anywhere. Well, this is what the market did tonight, and that's where you're at. You haven't broken out one way or the other. This is a resistance zone that is overbought. Okay. The Russell, same thing, but the Russell's at least widening out this. It was narrower here, and it keeps widening out. It's also done something that I said yesterday, and I want to point out again. Once the market got over this gray line, this dashed one, the 200-day moving average of closes, it conveniently made it the support number on pullbacks. Then, I pointed out to you just the other day that if you took a look, this was Monday, the red number, which is the 18-day average of closes, was underneath the 200. You had a crossover. I said crossovers generally end up in new highs being made. You tell me what this market has done. I'm not the only one that looks at this. I'm the one that tells you about it. There's a difference. You don't get this on most shows. You won't see it on CNBC or the other shows. I watch, I pay attention to it. More general, I think I'm more specific. VIX cash, what do I think the pros are doing? I think they're waiting to do what I've said in the past. Each time you've hit recently this lower Bollinger Band, they have been able to write puts looking for the market to pop back to the 18-day average. I don't see why they'd stop here. What worked in the past, until it stops working, you keep going back to the well. So if you can get down to that number, that's what I think they'll do, looking for a bounce, not a trend change. Right now you have an embedded reading, a bearish situation. That tells you the indexes are strong. Lose that and the two reverse. That's just the nature of what VIX does with the indexes. I'm nervous in the bonds and the notes. You're losing and correcting to the downside your momentum. If you do it enough, maybe you're going back to the 18-day average of closes. I see nothing on this chart that puts me in the bear camp, but plenty of reasons to not be as bullish as I was before, and probably neutralize that to a large degree. I see the same thing happening in the 10-year note. Now, I had an extra S there, but here's what you looked like yesterday. What did I say? Are we going to be able to stay over that band? I have my doubts. It's only 5% of the time you do. You gave it back. So I'm not so wrong on that. You know, you keep doing the things that you've seen before. Now, if you get under this low right here, which was a 139.28, what happens is all of a sudden, if you do that, you've got a pattern of a higher high, lower low. It's strange it's happening right in front of the non-farm payrolls number that we're going to get Friday morning. In the dollar index, if we take a look, okay, this market's re-embedding. It's done it. So the bears are back in control. What's interesting is the dollar's falling as short-term rates seem to be adding some yield to it. But until the market loses the reading and keeps it lost, that's what I think. In the eurocurrency, you lost the reading for 2 days in a row. You got to rebuild it. It's working on it. It's trying to keep both numbers over 80 in early trade today. If we go to Wednesday's trade, both numbers were over 80. They weren't on Tuesday or the day before. So it needs to get into Friday to know if we're going to embed again, which means you're forced to go through, at least me, sideways action. I wouldn't touch this market until you're into the non-farm payrolls now. Why? Because it's overbought. It's not embedded and it's up so high. Overbought is overbought. Embedded is embedded. You got to accomplish that first. In the Japanese yen, what do we talk about that 18-day average? How often do you hear me say, when you're above it, if you fall, markets like to get back and figure out what to do from it. Now, we had what's called a pipe here. And this was the pipe, as I call it. The market then broke itself out to the upside. Classic breakout, 2 settlements above the Bollinger Band in the top quadrant. I don't care about corrections after that. I think you're in that breakout, and that's what you were. You're getting your correction, but you'd have to take out down here to scare me that this market's anything but a base and the market just came back to its base. Plenty of reasons up there for taking money off the table. Bitcoin, I should have taken this arrow and pointed it up. You now have, I believe, higher lows. Let me just come to this low right here. That's 111.65. Got 11,165. Get your move up. You come down. This 11,260, 11,230, still not under this number, and now you get the higher high. So you have an embedded reading, higher lows, higher high. You hit the Bollinger Band. I think pros took money off the table. If you're in my morning subscriber video, I cover which moving average, and I don't show it here. I think that they used today on this pullback to come back in or try to come back in, and I still think they're looking at somewhat higher prices. The differential between OCT and Brent and WTI, well, it appears the market is making a statement short term that the 250 level is what it wants to stay over. Told you, getting under it too far, the market came back up, went up, came back down to challenge it. You seem to be in a differential right there. And the big question is, in the Brent, are you going to break out to the upside and use this as a base? I can't answer that. I can tell you had one move that was over it today. You see that. Couldn't stay very far over it. Tonight, it's trying to climb back into it. It's only 20 cents over it. The trend is up. You're overbought, and you'd have to buy a Bollinger Band. I'm never going to tell you to do that. WTI crude, same situation. Overbought into the upper Bollinger Band. You want to be the hero and think it's the breakout. Nothing wrong. That's up to you to do. I say that you get whipped when you're in that sideways action. Let it tell us what it wants to do. Same in the gasoline. That's too narrow and a very difficult trade, but not the case in the nat gas. And you know, all I keep hearing in the weather forecast, really hot August coming. And I think this market's building that into it. It's also building what's going on with these storms out east, impacts that are going to be there. Terrible storm that happened on the east coast of America off a tropical storm that looks like it would have been something more severe on the maps as it came in, but boy, the damage it did, my heart goes out to all those people. As I said, at 5:40 in the morning, I record a video for only my subscribers. Now, I start reading at about 4 in the morning. I start with Asia, move over to Europe, and I start making notes. In those notes, I get them ready to give to my subscribers at 5:40. I start off my morning video with what's going on in Asia, Europe, and what reports are coming out in America, the news of the day. It's maybe in a PowerPoint, 1.5 pages maximum. It's all headline. From there, I start explaining. I'll talk to you a touch about those fundamentals, those reports, very small amount of time on that. We go right into the charts, technical analysis, and I'm going to give you there. I want you to buy here. I want you to sell. It's done in that area because, number one, the law says I have to if I'm going to say buy and sell. It has to be between something protected. I can't just go out to you on YouTube and say buy gold, do this. I'm a registered broker. I have no intent of losing my license or breaking or even going to the gray line. I want to stay well behind it. But I can go in here and do what I want. I'm going to cover the markets in this exact sequence every single morning. There's going to be a scroll bar. And let's assume that you wanted to go right to the energies for whatever reason. Boom, just scroll it. It's going to light up and say energies. There's also a lexicon on the side. Most people use the scroll bar. They love it. I keep hearing about it. Ira, it saves me so much time. So you can go through it. These typical videos, 20 minutes long. They could be longer. Today I did my Spider ETF video. I think it was 35 minutes. I don't typically go that long. I try to keep everything at 20. But if I want to teach and I've got a lot to bring to you, why should I be contained? I mean, sit down, have a cup of coffee or a glass of wine, depending on the time of day. I pray it's not wine early in the morning when I'm doing this. I really do. But if it's that wine in the afternoon, I want to join you. And I cover everything. And in that coverage, what I'm trying to do is give you confidence about your own trading. That's what this is about. It is not about you following me and my track record. I'm never going to publish a track record. I don't want to be a CTA. I'm doing exactly what I want to do. This is a niche I really enjoy. I'm building my subscriber base and it's growing by leaps. That's what I wanted to do. And I answer questions. Now, I was trying to do this coming Sunday, our first webinar. I was supposed to have by noon today from my IT department the sign-up page, the way it would all work to give my subscribers free access, and then other people have to pay because they're not a subscriber. And we were going to do it at 5 o'clock in the afternoon Central Time this Sunday. I can't get this out in time, so I'm going to do it next Sunday. So put on your calendar, there'll be invites going to everybody at 5 p.m. a week from this Sunday, the live webinar. It'll go about an hour. Everybody's invited in. There is a fee if you're not a paid subscriber. Subscribe, it's free to you, okay? Pretty simple. I think you'd like it. And get to ask all the questions you want on futures, ETFs, spiders, stocks. A chart to me is a chart. If I've never seen it, I don't care. I'm going to put on my indicators and give you the analysis and explain it to you. But I do all that every day in these videos. So all you need to do is go to our page and you'll see under the word research. The cost, I swear to you, the idea here is to keep it low. You spend more on Starbucks if you're a Starbucks drinker, probably in a day than this costs you for the trial. After that, maybe 2 coffees. Okay, that's it. That's why I do it this way. I believe that it makes sense, and I think I bring something to the table you don't see elsewhere. Otherwise, why would you be watching this? Many of you say, bring back the ag. The people that keep writing, do you think they're a paid subscriber? Shame on them. All right, I'm Ira Epstein. You have a great day, and I will talk to you all tomorrow.